Alrighty traders, so today I'm going to share with you why I believe there is a double dip recession coming. And the last recession that's coming is going to completely wipe out a lot of the people, a lot of the middle class right now. And that's why it's so important right now, guys, more than ever, that we dig deep. We really start to find a solution to obviously with trading and so on and so forth, and you start to do really well with trading. And it's not easy, but you can do it. And I'm going to talk to you more about that, but then also going to talk to you about what's happening on the actual markets right now, some really key important levels, patterns, and a few other things that I really want to share with you. So let's get straight into it, guys. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so make sure you grab access to, I'm giving away free access to the trading course. You can see on the screen there right now, guys, I'm giving away free access to that course. So make sure you grab access to that. Now, I want to start off with a big picture here, guys. Big picture analysis of what I see is coming. And then why I believe more than ever, it is now time for you to really knuckle down and become really good at this thing called trading, right? And not just sort of dibble dabbling. Because the dibble dabbles, which is the 97%ers out there, unfortunately, if you are part of the 97%ers. Now, who are the 97%ers? Basically, the people out there that are really not taking real responsibility and accountability for what they're doing, right? And say, okay, you know what, I'm totally screwing up here in life. It might be your fitness, it might be your trading, and you might not be treating trading seriously. You might not be disciplined enough, right? There's a lot of things there of the 97%ers, right? So, and probably one of the biggest things out there is to say, you know what, I'm totally screwing up here and I really need to figure this game out, right? And the reason why I'm saying this is that because the 97%ers, you guys are going to get absolutely, well, should I say the bottom 50% of the big scale here, right? Because whenever I'm doing my advertising and so on and so forth, I can see the top 50% is where the money is made and where the bulk of the clients actually have it, right? The bottom 50%, they're getting absolutely destroyed. Unfortunately, the bottom 50%, if the bottom 50% are the people that, especially when I do my coaching sessions, guys, the bottom 50% people, they're the people out there that are just looking for the get rich quick thing, right? I'm looking for that next idea, there's no real foundations behind them, right? Because let me actually just put this here. Trading is difficult, right? Trading is a hard thing, and it's not the actual system, right? In that trading course, I give you my trading system. I even show you my trading results for this year so far. Or if you actually want to see my trading statement and my actual rule account and see what I've actually done this year so far, then again, get access to the trading course. And the very first video I give you, I actually walk you through, it's a few minute video, showing you my actual real trading account, right? So if you think I'm full of shit and I don't actually trade and all that sort of stuff, I actually show you proof positive of my actual real account there. So the purpose of me actually showing and saying this to you is this, okay? Is that trading is actually a hard thing, right? Trading is a difficult thing. And if you're going to treat it like a bit of a side thing out there, then guess what? You are going to get completely run over, right? Because trading is not an easy thing. And what is the hardest thing out there, right? It's trying, and one of the hardest things, right, is like we want to get ahead and then trying to rush it and force it, right? It's like a rush, quick. And the people that I've noticed even in my coaching program, and the one thing that I've noticed is that those people out there that are quickly rushing through it and trying to make money really quickly, you end up getting blown out of the water, right? Because there's no foundations to your success, right? Because guess what happens, right? You're gonna go through periods of really good periods, and you're gonna go through a period where you might take a few losing trades, right? Like, oh man, that hurt, right? But if you're doing the correct things, you can pick yourself back up and keep moving forward. So the big thing about this, guys, is that this double dip recession is the first, this next one that's coming. It's probably going to come over the next 1 to 2 years. And that's going to be a recession. It's going to hit us pretty hard. And then guess what? Then they're going to print a lot of money. But this last printing of money, guys, this is the big picture here that I'm going to get into the short-term technical analysis, okay? The big picture here is this, is that we're gonna go through a recession, okay, over the next 1 to 2 years. There's going to be a massive stock market crash. There's going to be unemployment rising, but guess what's going to happen then, right? They're going to come out and they're going to do another big QE, and the QE is going to be much bigger than any we've seen before. So, because if you just look at history, right, every single QE package has gotten bigger and bigger and bigger and bigger. So they're going to keep printing more money, right? So this is the big picture. They're going to keep printing more money. This is going to, and this is where it's going to get really, really ugly for most people out there, okay? And this is where this is a bit of a warning sign to most people out there. Is like, it's so important that if you really want to become good, at least become part of the top 50%, let alone the 1%, it's really important that you start knuckle down a little bit more out there. And so that next recession, they're going to print a lot of money, and they're going to print a lot of money, and there's going to be massive reflation out of that there. And so the way that the history has presented itself is that the next inflationary spike that we do get, it's going to be much, much, much bigger than when we got through COVID, right? So when that happens, and this is probably when the recession happens, this next recession happens, and they print a lot of money, it's going to reflate into another maybe 2 or 3 or 4 year massive boom. Inflation, stock market, everything just go crazy, right? Everything because there's massive amount of QE there. And through this process, it's going to have inflation is going to be huge. So when the inflation becomes too much, which by the way, guys, is going to be a beneficiary factor to that, right? Stock market, I believe gold and silver, I believe gold could see 10,000 then. I believe that we could also see things like silver. And that's where, guys, for me personally, if you've been watching me now for a while, is that my main focus when it comes to investing, like buy and hold for like 5 years or 10 years, has always been the metals and mining sector. Crypto is just a guess, right? It's like, is it going to be big, so on and so forth? Like, maybe not, right? I believe. By the way, guys, bit of a thing here, is that I believe that just by looking at the charts, that I believe Bitcoin is actually going to reach $100,000, right? I do believe that just by looking at these charts. I believe Bitcoin's getting ready for another big leg to the upside. So that's a bit of FYI for that there. But from a long-term perspective of where I want to put my money is, guess what? In the metals and mining, right? Metals and mining sector out there. And so when it comes to that there, and then that's probably going to lead us into around 2030 plus, right? Maybe 2030, maybe even 2029. Maybe it's going to be 2029 big crash. But there's going to come a point in time, guys, where interest rates are going to absolutely just skyrocket. Like, you think interest rates are high now? When we go through the next recession, interest rates are probably going to come down. There's going to be massive reflation, and that reflation is going to happen for another 2 or 3 years after that. So, and then that after that next reflation, there's going to be, that's going to lead us into 2029, 2030, 2031, 32, round about that area through there. And that's when the 2030s is going to be complete devastation for so many people. That's when the new world order is going to come into it. That's when the whole new revelation of things are going to come involved with it, and you're going to absolutely get destroyed out there. Now, for people that, and this reason I'm saying this is that because when that happens, guess what? You imagine interest rates now. Imagine if the inflation is so much higher. Imagine where they're going to put the interest rates. What's that going to do to the government debt? Defaults are coming and restructuring, and it's going to get pretty ugly for majority of the people out there. But the people out there that know how to trade the stock market, right? Because the stock market and the markets are always going to be around, right? You know that, right? So there's always going to be a money filtering process, which is the stock market, right? The stock market's always going to be around. So that's why it's so important, guys, that you really start to learn the education around and start to become a lot serious about trading and becoming disciplined of starting to build a bit of a foundation. Stop trying to rush around and look for the gimmick or the next get rich screen or the shiny object, right? Let's actually build a solid foundation. And that's where, like, my free trading course that I give you, I teach you the biggest mistakes you're making. I teach you the foundational things of how markets work, my trading system, and so on and so forth, right? So I do that for that reason. And so that's why I believe, guys, in this the double dip recession is going to completely wipe millions of people, millions and millions of people out there. And I don't want that. I don't want that to be for you. How do you not be for that? Even if you're starting with a small amount of money, right? Because we were all there. I was once $250,000 in debt and nothing to my name, right? Now I'm doing a lot better. So the purpose of me saying that is because I really want you to be on the other side of, let's actually start to build solid foundations, right? How do I actually get ahead in the markets? Getting ahead in the stock market is not about being lucky. It's about having a plan, right? It's about what are the type of trades I take. And even if you do have a good trading plan, like I do, I take some dumbass trades every now and then. It's like, oh man, that was such a dumbass trade. What did they do that for, right? But it's all about doing that. But you can actually start to do really well. So that's what I do. That's what I truly believe there, guys. That's coming, and why it's going to get really, really ugly. Millions are going to get destroyed out there. So that's a big picture there. Now I'm going to walk you through some short-term technical analysis of what's happening right now and what we could see over the next week, right? So short-term TA time. So let's actually look at the actual Nasdaq through here. One thing we're seeing through the Nasdaq is look at this here. So I've squeezed my charts up through here, and notice this here. Notice how we've actually had this move down through here, and then it just shot straight up like that through there. Looking at that through there right now, guys, that's actually we had all this up move through here, right? So we had all this up move through here, and then we had this little pullback, and we had this sort of push to the upside. I'm not buying this as a true breakout, right? Now it could be a true breakout is where it just breaks out and it just keeps moving, right? I don't buy it as a true breakout. What I see happening is, the reason why is because whenever we do get a really big move to the upside for a while like this, we end up getting something like that, right? Which is the gyrations. So one thing I'm saying is we had a very big up move through here. So this breakout that we're seeing here right now on a short-term level basis, guys, I believe we're probably going to start to come down through here. Bit of sideways movement, not a real big down movement, right? But probably just a bit of a sideways movement through here, and then we start to hold, pick back up and go, right? Hold, pick back up and go. So that's what I'm seeing through there on the Nasdaq. But on a short-term level basis, like real short-term level here, the big thing I'm noticing for is this here. Is like what actually comes tomorrow, because what actually comes, or the next day it actually opens up, because it's actually not open tomorrow. But when the market does open up, what's going to happen here? Because if we do get something like this going on, right? If we do get something like that happening in the stock market, then that's probably going to confirm us that we're probably likely to see at least a bit of a short-term movement on the downside coming out of that level there. So the big thing for me is, can we get if we get a solid close below this level here? What's the number, John? Every time I say this level here, guys, someone a while ago said, John, tell me what the number is. Some people are feeding their cats. So I've got to tell you. So the number is 16,700, okay? So if you're feeding the cat, then there's the number for you. Anyway, so that'll be on a short-term level basis, guys. You can see how that on a short-term, absolute short-term level, that 16,700 is indeed a definite strong level through here. So if we hold here and we get something like that happening the following day, then that's probably going to tell us this is now a bit of a false breakout move. Because look what happened. False breakout. Look at this here. It actually broke to the upside, but it's really done nothing ever since. So if we get that, we're probably going to see something like that coming out of the actual the Nasdaq through there. So that's the Nasdaq through there, guys. Dow Jones has already had its reversal. As you can see, we had this strong move up. So this is what I was expecting more out of the Nasdaq, but we didn't actually get that follow through. You can see very big move up. It came down, had a very big move up, and now we're actually coming back down again. This is what I was expecting on the Nasdaq, but again, we just didn't get that follow through on the next day through there. So that's what I'm seeing through there, guys. On the Dow Jones, what I'm expecting to see is probably just a lot more volatility now, guys. Like up days and down days and so on and so forth. And we're probably going to spend now probably another month or two just going sideways through here, guys. I don't expect too much movement, so we might go up a little bit through here and down through here, and probably just a bit of gyrations, bit of volatility, not really moving much within the Dow Jones. And then let's go to the the S&P, and look at the S&P, right? The S&P, this is a really key important level for the S&P, right? Real key important level for the S&P. The reason why is look what happened here. So the S&P actually had a breakout, came down, it came down and it engulfed, right? It engulfed to the downside and we held here. Now we had a little reversal to the upside. And so what I always like to see here is this next day, the next day the market opens up, which is not tomorrow, but the day after. The next day it opens up. If we do get something like this going on, guys, that's going to tell us that this is a false breakout. It actually looks like a false breakout anyway, right? Because it broke, look at this here, it broke up, but then it's just gone sideways. We haven't gotten any follow through here, right? So it's a very, very, very dangerous time thinking, oh, the market's just going to keep going up, right? That's obviously the very big key level there for me, right? When it comes to the S&P 500 and what's going on there. So that's what I'm seeing through there, guys, when it comes to the S&P 500. Now, once we do start, if the Dow Jones is going to do what I said it's going to do, which is just continue doing some volatility, and then I see another big leg to the upside. So if we're going to do that, we're probably going to get like at least a 50% retracement out of this whole level through here. So if we do get something like this going on, guys, right, if we do get something like that going on out of the markets through here, if we get something like this here, so something like this through here, if we get something like that, the reason why is because one thing I have found is that the 50% levels in big bars have always been a very big key for me, right? So if I'm looking back over here, see this big down candle through here, right? Notice what happened around about 50% level. Guess what happened around about the 50%? The 50% of that big bar it held, and then we started to go down, right? Look at this through here. That was a big down bar, right? But look what happened. That 50% level all through there of the big down candle, it held, and once we actually broke up, it reversed, right? So I'm always looking at the 50% levels of this bar. This is a bit advanced, but I'm always looking at 50%. So if I zoom right in now, if I zoom right in on this candle, then I'm looking at around about 50%, and you can see what actually happened here. So if I go to the hourly charts, right, you can see what happened here. It came up and it's sideways. So if we do, we're roughly at that 50% level right now, right? So let me take everything off the screen here. The big key for me, guys, is this 50% level, right? Look at this here, right smack bang on that 50% level through there, right? As you can see from that low, that point there, or you could even have it through there, either, right? So through there, you got that 50% level. So this is really, really, really important. Do we hold here and push up? If we push back to the upside, we're probably going to follow through. That's probably going to be the follow through level. If this was a bit of a fake out before the long term holiday, that's what I'm thinking. If that is a bit of a fake out before that, and then we do get something like this, as I said before, and then something we reverse, come back down like that, this is going to tell us that, guess what? It's probably then we're probably going to start to see a bit more downside to come out of that level through there, which I do believe is going to happen, knowing the fact that that's the short-term picture, but that's the short-term what happened in the last couple of days. But the big picture here is that we had this massive, massive up move, and whenever we do get very big moves to the upside, we tend to get this sort of action going on, right? So another very big move to the upside. So I'm expecting something like that to happen. Again, not an absolute crash, but again, probably just a 50% retracement, at least a 50% retracement from this here to this here, which will bring you down to around about that 5,100 level on the S&P 500. And now the other one here is the Russell, right? The Russell is actually really interesting because look what the Russell's doing. So the Russell, for me, is potentially building a bit of a triangle pattern right now. So the Russell right now is potentially building a bit of a triangle pattern, and we're just going overall sideways through here, right? So just overall sideways, and what we're seeing through here is we're seeing a potential setup for a big breakout. Now, I've always been bullish to the Russell. The Russell's been, if you've been trying to short-term trade the Russell's been one of those markets that's definitely been, really, really, really difficult to be trading right now because of the volatility. But I do believe that we may be getting ready for something like this, and then potentially a bit of a breakout through here. So if we get something like that going on, there could be quite a nice move back up towards that level there. I've always had a $300 target on the IWM, so let's actually see what actually goes on with that, guys, and what actually happens with that. And just last but not least, guys, a quick little update around the metals and miners. So looking at gold and silver through here as well too. And we can see, guys, that we had this very big strong move to the upside down, and then another very big move to the upside, and then now we're coming down through here. So lots and lots of volatility, complete fake out with gold through here. Same sort of thing that I'm seeing right now across even the stock market. I'm expecting to see a lot more volatility through here, guys. I don't expect to see too much of a down movement, but I do believe we're getting tired right now on gold, and that's what gold's doing right now. You can see gold complete fake out. So I do see potentially, if we're going to look at some longer term stuff, if we do start to see a lot more of a downside movement out of these markets through here, which is possible, guys, then we could possibly start to see a move back down towards these levels through here, which indeed overall, guys, if we have a look at that, that's just, if we look at 50% from low to high, like we could actually start to see, another 5% or so drop down on gold through there. But I am a very, very, very big believer in a lot more upside to come out of that level through there. And also looking at the silver chart through here, very strong move to the upside, and now we're just getting a pullback through here. So right now, guys, it's obviously this leg is to the upside. It's completely run over now. I mean, it's completely ended now, and now we're just going through one of these gyrations. So if we do go through, as you can see, so last time from the low to the high point, you can see we got actually to the 50% level, right? Or less than 50%, and then we push to the upside. Right now, as you can see, if I go from there to there, right now, we're not at the 50% level, but this whole area through here is 50 to 60%. That's where I do believe it could possibly actually get to for when it comes down to that through there. So there we go, guys. Hope this really helped you out. Traders, make sure you grab access to that trading course, which is free, which talks to you about the biggest mistakes you're making right now, the chart reading techniques that's been working since the 1950s. I teach you my trading system, and also teach you what I had to do to go from $250,000 in debt to start to make money at the markets. And traders, the last thing I want to remind you of is that if you want to be part of the top percent of people out there that do really well, it's all about trying to adapt their habits, right? Because it's not just a system, like give me a system. It's like, what are the habits? Like what are the habits that I want to start, that I need to start to incorporate in my trading?